Hiren Ved is here. Let's go across to him to try and ask him all of these things. Director and CEO of Alchemy Capital Management. Hiren, great having you. Thanks so much for joining in. As always, a pleasure talking to you. And I would love to start with this, Hiren. Is the Indian renaissance of manufacturing still on, despite not a very strong growth in capex in FY25 and the promise of an okay kind of uptick, at least the central figure for capex in FY26?
No, I think manufacturing is very much kicking and alive. I think people have misunderstood what everybody is assuming is that the capex figure has gone up from the revised estimate of 10.2 to 11.2, which is a 10% hike, right? I think what needs to be understood is that if you take 10.2 as the revised number, we have the number from April to December, which is about 6.8. What it means is that in the last quarter of this financial year, which is the current quarter that we are in, the government will have to spend 3.4 trillion rupees. To that, you add 11.2 trillion of next year. That gives you roughly a figure of 14.6 trillion in the next 15 months. If I take it as a simple monthly run rate, it comes to 97,000 crores a month over the next 15 months, including January, which is just gone by. Now, obviously, this is assuming that they are able to spend what they have projected, both this year as well as next year. And if you look at what they've spent in the first 9 months, the run rate is about 76,000 crores. So if you look at between 76 to 97 is actually a 29% jump, right? Also, and I'm not even counting state capex that the state governments could do, neither am I counting what the PSUs do, which is not included in this number, right? So I still believe that if you look at capex to GDP, it is still at its highest rate. But I guess what happens in markets is that people look at incremental moves, right? Where was the incremental delta immediately? And I think given the fact that incremental delta was in the 1 trillion consumption stimulus and the headline number in capex growth is only 10%, I think that's the interpretation that most investors are taking. But if you actually look at on a run rate, because you must understand that capex numbers is on cash accounting, right? Which means actual money spent. So assuming that they spend the 3.4 trillion in this year, the balance amount, and 11.2 trillion next year, you will actually see a 29% YOY growth on a 15-month run rate basis, which is not insignificant in my view.
May I ask you a question just on that? The capex and your math works out, and this is when we spoke to the finance minister, that's what she said as well, that there is a bump up on capital expenditure. My question is, can they spend it? Because the capex was there the last financial year as well. It was difficult to actually execute and spend, and yes, there were elections, etc. There is also a limitation on what the central government can spend. Roads, railways, and they're limited items.
So obviously, all heads will not see an increase. Like, for example, we have seen that roads and railways have plateaued out, right? On this question, whether they can spend it, I think people are not looking at the numbers. People are just talking in the air. In December, the capex number is already out, okay? And it is 1.2 lakh crores, if I'm not mistaken. Nobody is looking at the numbers. People are just looking at the overall number and reacting. And that is fine, because I think in a few days, the budget will be forgotten, and then the real numbers and earnings will matter. So I think right now, it is always the nature of markets to discount whatever is here and now, what stares at you. Again, I am not saying that consumption won't do well. I think what they've done is phenomenal. But to say that capex is dead in India, I think that's too much of a presumptuous assumption in my view.
No,
The
no, no.
numbers
Agree,
have
agree.
to be.
Agree, Hiren. No, no, no. So you are right. I mean, we are not saying it's dead. And by the way, you are right. We actually highlighted this on Saturday, just before the budget, that capital spending was about 1.7 trillion in December, the highest in a month and double of December 2023.
Not even 1.4 trillion. It was 1.7 trillion.
Exactly. So we highlighted this. And now we'll see a 21% bump up in February and March in order to reach that 7% number as well. Yeah, but the only question was that while that will happen, could the numbers kind of become a bit slower in terms of the incremental growth? And by the way, Hiren, that's the other question, which could be fine, right? The government in its wisdom has decided we front-loaded capex for so many years. Let's give the ailing consumer a bit of a push. So which is fine also. The portfolio question that I have for you, Hiren, is that the last 2-3 days at the budget party on Saturday late night at Motilal Oswal or otherwise, right? Everybody seemed to be now thinking that, or talking about it, that is it time to move incremental money or existing money out of expensive fancied stories, renewables, defense, railways, etc., what have you, and move into the safety of maybe banking, maybe some of the other large caps, maybe consumption large caps, or even mid caps for that matter. Would you take that step? If you had a renewable energy company in your portfolio, would you trim positions there? Because even after the corrective moves the last few days, the valuations are still expensive.
Well, I think for starters, unfortunately or fortunately, I didn't have a renewable energy stock in my portfolio, right? So I think, look, I mean, I agree with you that, how we balance portfolios is a completely different question, right? I mean, I think it depends on investor to investor, where they are overweight, where they are underweight. My simple point was that, and by the way, we also had a significant exposure to discretionary consumption even before the budget was there. So I'm not complaining, I'm happy. I think that what has happened is that the economy was working on only one engine, which was government capex. Now, the government has tried to start the second engine of growth, which is consumption, right? And which is the right thing to do, because I believe that capex was in a cyclical slowdown, but consumption was on a structural slowdown, not a cyclical slowdown. Consumption has been struggling now for many years, especially post-COVID. And I think there was a dire need to get consumption up and going. But again, if you look at the delta, you will see that the maximum delta has come between the 12 to 50 lakh earnings bracket, right? And those are slightly the better off consumers. And therefore, I don't think that staples is going to just because you have a tax break, people are not going to buy more toothpaste or soap or whatever, or hair oil for that matter. I think a lot of that is going to go into discretionary consumption. So hotels, autos, QSR, so on and so forth, right? So I think more discretionary consumption is likely to go up as opposed to consumption at the bottom end. Now, consumption at the bottom end will largely depend on rural spending power. And I think the government has also taken a lot of steps to see that some money flows, in terms, even in the agri sector, where they're focused on 3 pulses, where they've said we will buy whatever the farmers are growing. So this is a more balanced approach. Post-COVID, we had gone all guns blazing only on capex. Now there is a little bit of rebalancing and letting other struggling areas of the of the economy also improve. And therefore, I'm not complaining. As I said, look, I mean, the delta matters, right? And I think that, PSUs and capex had done phenomenally well last year. And they go into
Is there
some.
any one idea or space that is exciting you right now, Hiren?
Actually, within the consumption theme, and I've said this before, I like real estate.
Oh.
And I'll tell you why. One is that obviously they've taken away the presumptive tax on rent on a second property, right? And I also believe that premium, with lower taxes, the affordability of EMIs should go up, and premium real estate, in my view, should do very well. We also forget that all of the tax savings may not necessarily go into consumption because people save as well, right? So some of this savings will go into the capital markets, some of it will go into real estate, and therefore there was another interesting view which I got, which is that typically if you see there is a bulge in terms of the returns that are filed in and around the minimum exemption limit. And now that that exemption limit has been taken to 12 lakhs, you will see a lot of people now having sort of white income up to 12 lakhs because they don't have to pay tax up to 12 lakhs 75,000. But the question is, all this money is going to come into the formal economy. And once that comes into the formal economy, you can only do a few things. Like, for example, in capital markets, you can't use cash, right? Even most of the developers and high quality developers today are only doing business in white. So I think that the most interesting part within the consumption basket, like everybody has bid up other names, but I think real estate could be a very interesting area.
Interesting take, very interesting. I wish we had more time, Hiren, but always a pleasure to speak with you. Hiren Ved there on manufacturing, very, very bullish on the budget, and says real estate is the consumption pocket to look out for.